Good morning. I hope you had a good night and didn't look at your portfolio too much because, as you can see, markets are down pretty bad. Well, actually, the whole markets in general, not only crypto, but the stock markets took a hit as well. So, yeah, let's analyze the bit and see what happened. I want to go back to the root cause of this. Well, if there is any, it's probably just a collection of events that happened through over the whole world. Leave a like, subscribe, and comment if you like these kind of updates. I'm not a technical analyst or financial advisor. I'm just here to give my honest and personal opinion. So the trigger of this crash could be blamed to the Japanese as they increased their interest rates, and this caused trillions worth of Japanese debt that had been cheap for the last decade to get substantially more expensive. This forces debt holders to sell their assets and repay their debt. Additionally, there are several factors adding uncertainty, as we have major US elections coming up, we have a presidential candidate that suddenly stepped down from the race, we have yield curve inversion and rate cuts happening soon, which is typically a bearish event. And then Iran is also threatening with nuclear war. We already had several wars that involved major countries, and consumer debt is already at an all-time high, while employment is continuing its uptrend from the low. Here we have a tweet of Peter Schiff. I know he's not the most loved crypto person in the world, but he makes a good analysis on the US debt, where he says, the US national debt just broke $35 trillion, up over 7.2 trillion since Biden took office. It took 43 presidents 215 years to add the first $7.2 trillion. Biden did it in just 3.5 years. Trump added a single-term record $7.8 trillion, and Biden is now on track to break that record. So both parties are to blame here, and I know it's way more complicated than it just looks. There's a lot of math and other things going behind this debt, but it's still a huge number, $35 trillion. This number also brings extra uncertainty on a layer of events that I just described. What's also very curious to see is that you have very intelligent investors like Warren Buffett selling huge positions and holding record amounts of cash. So it's like they almost predicted that this would happen, and yeah, now they're just waiting to enter the markets again with a very high discount. So let's go back and talk about the Fed. The Federal Reserve, they control interest rates, which affects how much it costs to borrow money. Lower rates make borrowing cheaper, encouraging spending and investing, while higher rates make borrowing more expensive, slowing down the economy but reducing inflation. When interest rates are high, safer investments become more appealing, so people pull money out of riskier options like cryptocurrencies. When rates are low, investors look for high returns in riskier assets like cryptocurrencies, which can drive up their prices. For example, in 2018, when rates increased, Bitcoin price dropped by 80%, whereas in 2021, very low rates helped Bitcoin reach record highs. Rising rates affect crypto by reducing risk appetite, increasing opportunity costs, and creating margin calls and leveraging issues, making borrowing to invest in crypto more expensive, and eventually leading to sell-offs. So understanding how the Fed interest rate decisions impact cryptocurrencies is important for anyone considering investing in cryptocurrencies, as the Fed's choices will definitely continue to influence what direction the crypto markets go in. This all being said, there might be some good news. The M2 money supply is on the rise in almost every major or larger country, and you can see that the global liquidity index is ready for a reversal. When there is maximum pain in the markets, the Reserve will turn the money printer on and inject massive amount of money into the economy and the markets, just like we saw with the COVID crypto crash. And this could cause a V-shaped recovery in the crypto markets as we saw back then. Bitcoin could also prove itself as a safe haven alongside gold, and Ethereum could take over with DeFi as a safe haven for traditional banking systems. So to finalize this video, I want to say that August and September have historically always been a very bad month for crypto. You can see with this chart that there had been other corrections in this 2023-2024 cycle. And here, this is a tweet of my friend Quinton, where he said that this is the first time in this cycle where we have seen a 34% correction. And probably more corrections will happen this bull run. Does that mean that I believe this bull run is over? no, I don't think this bull run is over. We're still very early and see this as a very good buying opportunity. If you have cash left and are looking to enter the crypto markets, now might be a good time. So again, this is not financial advice. This is just my honest opinion. Do what you think is right. Enjoy your day, go outside, touch some grass, and I see you in the next video. Cheers, bye bye.